Hello and welcome to another edition of Magnified, a quarterly deep dive into the Antipodes global portfolios and quarterly market drivers. Today, I'm joined by Vihari Ross, Co-Portfolio Manager at the Antipodes Global Strategies. Vihari, welcome.
Thank you, Sam.
Vihari, as we sit here today and wrap up another quarter, we saw the market again focused and fixated on the AI investment cycle and almost singularly focused on NVIDIA. And over the quarter, we saw markets up, or the MSCI All Country World Index up around 12% in US dollar terms. And if we pull out NVIDIA, that actually accounted for around a quarter of those returns alone. And if we add in the other Fab Five, Google, Amazon, Apple, Microsoft, and Meta, that accounted for over 50% of those returns for the first half of the year. I think the normal comparison that investors are making at the moment is one of that with the dot-com bubble. Is that a just relative comparison?
I think, the thing that we find in the year 2000 is, yes, there was the pets.com of the tech bubble, but there was also Cisco, there was Intel, there was Microsoft. These were, highly profitable and successful companies. The reason they fell at that time, wasn't because the internet wasn't amazing and because the internet didn't change our lives. Of course it did, but the reality was in terms of what was priced into those stocks, relative to what the future held, the fact that it took longer for the cycle to play out, the fact that there was more competition that played out over time, just meant those stocks were overvalued relative to those future outcomes. Turning to today, NVIDIA is not as overvalued as Cisco was, back in the year 2000, but we still have that long duration of the adoption of AI. We have the risk of competition. We have the risk of, their own customers, looking to disrupt them in terms of providing an alternative provider. So there's a range of outcome risks here for NVIDIA. The other thing I'd say right now is that it isn't just about NVIDIA. As you mentioned, those other big tech companies have also driven really strong returns. But what I would say is there's a real dispersion there. While there's clearly expensive names within the cohort, like a Tesla, like an Apple, on the other hand, there is pragmatic value ways here of potentially, playing that cloud transition as well as the monetization of AI without necessarily paying sky-high multiples. But what I would say is that the NASDAQ in general, is now trading at multiples, very close to the last peak we saw in 2021.
The way we normally see these bubbles dissipate is through a broadening out in terms of stock performance, and in most cases a derating, and where a company turns out to be overvalued. So, if not necessarily in some of these tech stocks, where else are we seeing overvaluation in the market?
So where I would say we really are seeing stretch valuations right now is in the growth and quality factors. That's across, the consumer side, the hardware side, healthcare, around the GLP-1 trade. And where I would say it's really skewed and stretched at the moment is particularly in those US mega caps. If we look at, growth and quality as factors, their valuations have become stretched. They were stretched, 12 months ago, they've become more stretched. The value factor, meanwhile, isn't out of whack at all relative to its history. It's at a slight discount to its history, and in fact, compared to the growth factors and the quality factor, it's actually at the biggest discount in 15 years. So what we encourage our investors to be mindful of is having that style diversification in their portfolios, particularly where we're at this, at these stretched valuations, we expect fundamentals to come to the fore and we expect that dispersion to narrow, and that will be good for the performance of the value factor.
Vihari, turning to portfolio performance over the quarter, both the Antipodes Global Fund and Antipodes Global Fund Long underperformed the MSCI ACWI index over the quarter, primarily led by underweight to that US mega cap tech complex and not holding names like NVIDIA and Apple, and also having an underweight to that quality factor that you just mentioned, where we are seeing stretched valuations. But turning to some of the portfolio holdings, we saw a bit of stress in areas like Brazil and Western Europe over the quarter.
Yeah, I think, politics ended up being this front and centre issue that came to the fore that did impact our short-term performance, albeit temporarily. Looking at something like France, obviously that right-wing, parties started to get a lot of support there, and that led to, concerns around, what that would mean for fiscal spending and tax cuts. The market itself, French market itself, was down 9% over the quarter as a result. Impacted our holdings in Societe Generale and in Score. As the month went on, in the end, the moderates did end up getting, more votes than expected, and that sort of initial risk and reaction in French markets dissipated. Similarly in Brazil, the market was down 11% over the quarter. Their president-to-be came out with some really punchy comments around his desire, for more fiscal spending. Again, once he sort of saw the market's reaction to that, he did start to backtrack on that, and you did start to see, yes, an initial impact on holdings like Sendas, but again, that's something that we don't consider a persistent issue and actually created a buying opportunity for that stock.
Sure. And on a sector basis, Vihari, we saw some positive contributions from areas like industrials and healthcare. What contributed over the quarter?
So there was probably a few key ones to point out. Siemens Energy was a stock that continued to contribute. That's a business that's going to, kickstart sales again in its wind turbines business. They also had an upgrade in its power and gas business. Alnylam Pharmaceuticals, that's a RNA-based pharmaceutical company. In their new cardiomyopathy drug trial, they actually had a really good result. It's a 28% reduction in hospitalizations and deaths, compared to the existing Pfizer treatment. So that's had a big upgrade, and share prices run as a result. The other big contributor over the quarter was TSMC. That's obviously the producer of leading edge chips, and clearly, that monetization pathway for them in the development of AI technology. They're clearly a leading provider to NVIDIA, to AMD, and this is a company that is up, yes, over the quarter, but 75% year to date, and they're also benefiting from that earnings upgrade cycle with now, 20% growth expected in their revenues in 2024.
Sure, a pretty positive outlook for TSMC. Looking at the portfolio a little bit more broadly going forward, against a pretty volatile economic backdrop and a political backdrop coming into the end of the year. Vihari, I think it's always good to put this into a bit of a regional context as well around where we're seeing value in the world today. Are you able to talk us through, some of the regions? Perhaps let's start with North America.
Yeah, so in North America, we do retain that underweight. That has been something that's been a headwind over the last 12 months, but we see that as something that will be a tailwind to our performance on a forward-looking basis, given those tight credit conditions, the deteriorating consumer environment, and frankly, the much higher starting valuations in North America as well. The other thing we're really monitoring closely is the credit cycle. We have seen a kick up in, delinquencies and bankruptcies at the more highly leveraged end of the spectrum. And that's an area that's of particular focus, looking at parts of the economy that are highly leveraged, particularly areas like private credit. That's created a lot of growth and employment in places like the technology sector, in the consumer sector and in services. And, collectively, these companies that are highly geared, do employ, 20% of the US working population. So we put it that way, you can see that, if conditions do stay tight, you can see that the impact on the real economy can start to manifest quite quickly.
Sure. So a few risks to be mindful of in the US, but where are we finding opportunities?
So Sam, we've recently added to undervalued cyclicals in the US. That includes a recent investment in Alcoa, aluminium producer. That's going to benefit from favourable supply versus demand dynamics, and it's very leveraged to a pricing uplift that will ensue. It's also got those favourable tailwinds around decarbonisation and the green energy shift. Another addition there, I mentioned earlier, is Alnylam Pharmaceuticals. That's a stock that is utilising, harnessing that RNA technology, for multiple disease classes. It uses this, essentially gene silencing, where your body is encouraged not to produce that particular protein. They've got a real opportunity to expand that technology out into multiple disease areas, and particularly, larger disease cohorts as well, which is really positive for that stock. The other area where we continue to have exposure is in those structural investment trends, being the cloud and AI monetization. So we maintain our investments in Oracle and in Amazon. And over the course of this year, we've also added to Qualcomm, which is the leading provider of chips in our handset. So as AI is brought to the smartphone, Qualcomm will benefit from both a pricing perspective and a volume perspective.
Moving across the Atlantic, Vihari, we finally got it. The first major central bank to cut rates was the ECB over the quarter. What does this mean for Europe?
Yeah, so this is the first time the ECB has led the Fed in terms of taking rates down. I think, the thing with the ECB, the European Union in general, is that the economies have been more sensitive, to that higher rate environment. Compared to the US, they haven't had as sticky inflation. So you have already seen sort of weaker conditions there in terms of the credit cycle, in terms of the consumer cycle. And now we're expecting them to be, more sensitive on the loosening side as well, which, should be favourable for the EU. What we're finding there and continue to find is those resilient multinational businesses that happen to be listed in European markets but have exposure to revenue streams all around the world, and also exposure to a number of financials names that we've added to, in particular over the quarter. And I'd encourage our investors to listen to our July episode of the Antipodes Good Value Briefing podcast that covers those stocks and sectors in more detail.
Turning to emerging markets, we touched on earlier how closely they can be linked to the US rate cycle and, the volatility that can ensue. But at Antipodes, we've always had placed an importance on and looking for alpha opportunities in emerging markets. What are we seeing at the moment?
Yeah, so at the moment we have exposure in EMs across Latin America, Indonesia, as well as China. I think we all know, the Chinese economy has been under pressure, but we are seeing signs now of, a stabilisation and also, more favourable policy direction as well. So we've probably got sort of three key buckets of opportunity we're finding in China. So the first is attractively priced cyclicals. That's including companies like Alibaba. That's actually returned to double-digit growth. And it's also got a really punchy capital return story. It's already returned, 5% in the first half of this year in terms of yield back to shareholders. We also have an investment in KE Holdings. That's one of the largest property portals in China, and particularly skewed to the secondary market, where we're seeing, signs of stabilisation in the property space there. The second bucket is what we would call defensive names. We have an investment there in Tsingtao Brewery. That's stock trading at a 6x multiple in an oligopoly structure, defensive consumption patterns, and sitting in a structure where it's sort of a strong number two player. The third bucket we're seeing is those structural trends in China, where we are seeing a benefit from, thematics that also exist in other parts of the world. The monetization of AI, green energy, and then relocalization as a thematic as well, which is something that's been, a big theme in the US, for example. So where we're seeing opportunity there is in, domestic champions around parts of the cloud complex, but also, interestingly, China's investment in its own grid. That's a real renewable energy story that's probably, often overlooked, or people that, investors don't spend a lot of time looking at it. And if we look at China, they're actually going to get to their 2030 goals on solar and wind by the end of this year. And incredibly, by 2025, they're actually going to have 40% of their power generation is going to be renewable in nature.
Well, it's something that is quite often overlooked. We think about these trends and often think of the West, but not often China leading the way. Vihari, looking perhaps a little bit further north than China, in areas of developed Asia like Korea and Japan, we've added more to the portfolio over the quarter. What are some of the more recent additions? Yeah,
so I think in Korea, we've seen a lot of opportunity in, beneficiaries of the Korea Value Up program. We saw how much that benefited the Japanese market in terms of improved corporate governance, improved returns to shareholders. That's something that the Korean market is on the cusp of. Our Korean holdings are really anchored in, a number of financial names, including KB Financial and Shinhan Financial, as well as an investment in Hyundai Motor. That's a business that is, poised to benefit from growth across, internal combustion engines, hybrids and EVs all around the world, but it's well positioned in growth markets like India and the US as well. And there has a real, again, a capital return story attached to it. We also have a recent addition of Samsung, obviously a leading provider in the oligopoly market of memory. That's a stock clearly that will benefit from that AI monetization trend as well. And it's trading at less than 1.5 times book value. It's trading at a discount to not only its own history, but relative to its peer group as well.
So some excellent value opportunities in Korea. Well, that was a great wrap, Vihari, of some of the drivers we saw to portfolio performance over the quarter, some of the dominance we continue to see in the tech space, and the fact that overvaluation seems to be creeping into the mega cap complex at large, particularly the quality factor. Thanks for taking us through the portfolio pillars and as well as a trip around the world in terms of new portfolio additions.
Thanks for having me, Sam.
And thanks everyone for tuning in, and be sure to tune in to the Antipodes Good Value Briefing podcast, soon to be released later in July.